Welcome to the Three Questions Webcast series. I'm Wayne Baxter, Senior Executive Manager with One Capital Management. At One Capital Management, we develop and implement strategies for our clients which strive to grow, protect, and ultimately distribute their wealth. And we do that by offering investment wealth management services. Thank you for taking time to check us out. And my clients are often referred to as cross-border clients. Why is that? Well, it's because they're either U.S. or Canadian residents who invest in U.S. and or Canadian dollar-denominated securities like stocks, bonds, and ETFs. Our process for advising our clients includes an in-depth discovery and diagnostic analysis of their wealth management goals and objectives. And as I've often stated, wealth management is multifaceted. There are several areas beyond investment and retirement planning that need to be discussed and considered. And at One Capital Management, we call that process advanced planning. Under the investment planning umbrella, we include an in-depth risk management review, or if you prefer, a review of non-investment risks that a family is likely to face as time goes by. One risk you'll want to prepare for is the financial impact that will result if you or your spouse or partner were to die unexpectedly. On the Three Questions webcast, this time we're going to be asking questions about term life insurance. And if you find this episode helpful, be sure to subscribe to our YouTube channel so that you don't miss an episode. On this edition of the webcast, we're going to ask the 3 questions you should ask before purchasing term life insurance. Joining me once again on the webcast is Scott Thurman. Scott is the principal and a life insurance general agent with Thousand Oaks, California-based TNT Premier Insurance Solutions. Once again, Scott, welcome to the webcast. Great seeing you again.
Thank you, Wayne. Good to see you.
Great to have you. You know, we've done a pretty good job here. We've covered the need for long-term care. We've talked about long-term care insurance. We've also talked about the importance of permanent life insurance and how it's different from term. We're going to talk about term today. And as I've said before, and I'll say it again, and I'm happy to say it, is that, you, Scott, have been an incredible resource for me and my clients, especially when it comes to assisting with the sourcing, the underwriting, and the placement of life and health related insurance. And I'm really happy to know that you're going to be joining me. Again, we're going to be doing additional webcasts. For those who are just checking with us now, we've done webcasts again on long-term care, permanent. We're also going to have a discussion about long-term disability, or which is kind of a Canadian way of saying it, or DI, or disability insurance. If you missed our previous webcasts, I would encourage you to visit our Three Questions Webcast YouTube channel. You can catch them all there, including the webcast that Scott and I have already done. So why don't we just get right to our questions, Scott?
Sounds good.
All right. So again, we're talking about term insurance today, so that we're going to ask the 3 questions you should ask, or review the 3 questions you should ask before purchasing term life insurance. And the obvious first question, Scott, I think you would agree, is why would I ever need to buy term insurance?
That is the very beginning, and that's a great question. And it's risk mitigation. It's no different than if you own a car, you have car insurance. If you're in a home, you have home insurance. If you're renting, you have rental insurance, and you have health insurance on yourself. We insure things for the what ifs in life. And if you are a main breadwinner of your family or a partial breadwinner, or if you're a stay-at-home mom or dad, there are reasons for you to have life insurance, because you have to replace that income if something happens to you. Or if you're the stay-at-home person, if something happens to you, your spouse, who is the main breadwinner, is going to have time of grieving. They're going to have a time period where they're not going to want to work. They're going to want to take care of the kids. They're going to want to try to get through that normal grieving process, and you don't know how long that lasts. It can last years. And when you're worrying about the emotional and mental part of that, you shouldn't have to worry about the financial part also. Term insurance is a very inexpensive way for anyone from early 20s, newly married, all the way up until older ages, where you can get life insurance and protect your family financially. So that really, just about everybody, I believe, needs life insurance, unless you just don't don't have any income at all. I mean, you're trying to replace what you have. So
Yeah, this idea of trying to figure out the how much is interesting. A big part of what we do, what I've been doing with my clients, and it's been this way for, I almost hate to say it now, decades, is the importance of capital forecasting, like the understanding of how do you figure out how much term insurance you should buy. Well, it's really, it's pretty hard just to go like this and figure it out,
right.
you know, take off the shoes and start, that ain't going to work either. There's not enough digits. So what needs to be done is there needs to be a really detailed analysis and forecast of the potential future income that we're actually looking to insure. We need to know what that is. And so oftentimes you're forecasting out, it's not ridiculous to say 20, 30 years, right? If you're looking to replace income, or you have a mortgage, say you have a sizable mortgage on your property, and the primary breadwinner passes away, like you mentioned earlier, and you may want to factor all those expenses in to determining term insurance. So it's important to forecast. It's important to do the forecasting and analysis, and not just try to figure it out at the top of your head over a cocktail.
And if I can just add, most life insurance carriers will allow you financially, they will underwrite up to 15 to 20 times your current annual income. So you do that forecasting, you do that as a wealth advisor, you can get 15 to 20 times your annual income. And as time goes on, it may be necessary to add another layer in 5 or 10 years. Or layer it with permanent insurance. So, and I know we talked about that on a different video, but yeah, that's sort of a starting point, I guess, if you're trying to figure out how much insurance to get.
100%. So this is a common comment that, I've heard over the years, and I think is a perfect second question. And that is, isn't all term insurance the same? I mean, isn't just everything that isn't, there's no variation?
The concept is pretty much the same with most carriers, but there are many variances and nuances to it. And there are certain types of term insurance that I would never suggest anyone accept. And for example, term insurance, you can have level term, which just means you're paying the same amount every year or every month until that term has expired. It might be a 10-year policy, a 20-year policy, or a 30-year policy, or a variation within them. If you get a level term, you're going to pay the same day in year 1 as you pay in year 29 on a 30-year term. Great policy. That's a good concept. The bad concept is annual renewable term. And certain people buy annual renewable term, and it renews every year, and it increases every year. And after the 3rd or 4th year, those people end up coming to someone like me and saying, wait a minute, this is going up. Why do I have this? And I look at them and say, you shouldn't. Let's get you into something that's better. There are also other things that are very important with term insurance. In my opinion, when you get a term policy, you need to go with a company that's going to give you fair and solid underwriting. There are some carriers that their underwriting is really tight. And by that, I mean, you could be a really good rating, which would be like a preferred rating with one carrier. Another carrier could give you a lower price for preferred, but they're not going to give you a preferred rating. So you apply with the company that you think is better priced, and then they give you a lower rating, and it ends up costing you more. So you need to know which carriers have tight underwriting, which ones are a little loose, and it also fluctuates with time. It can go up and down. So that's an important factor. A third factor is the convertibility of a policy, and this is very important. If you were to purchase a 20-year policy, Wayne, you want to be able to keep that policy forever. And if something terrible were to happen to you at year 19, maybe you find out you have a disease that you can't do anything about, but you're going to live a handful of more years. that policy is going to term out the next year. If it is convertible, you're able to convert it to a permanent policy, keep the policy in place at the same rating that you originally qualified for. So if you qualified at a really good preferred rating, even though you've got this disease that you'd be uninsurable, you're now still a preferred rating. So you want to have companies, you want to get life insurance with a company that has a good convertibility and that will convert to a permanent policy.
So from a strategy perspective on that one, if you have a 20-year policy that can be converted to a permanent, is it logical that you would almost always wait until, like you mentioned, like year 19 or to the end of the policy? Have you ever had strategies where you've converted sooner? I guess one could be if you wanted to start contributing additional money, but have you seen a trend of what most people do? Do they usually wait, or do they convert sooner? Because obviously the premiums, while the medical underwriting stays the same, the premiums will be adjusted relatively.
Correct, for age. I guess the key point is, are you still insurable? So when I write a policy, now, 15 years later, if there's a need for permanent policy, if the person is still healthy and insurable, then we might keep that term in place and write a permanent policy. If they're not, if they're going to get a really bad, low rating because of their health, or they're uninsurable, then yes, we will convert it early. We can convert it, anytime during that process from year 2 to year 20. I just like to keep those term policies in place when I can because they're so inexpensive.
Understood, exactly.
My wife and I had 20-year policies just expire a couple of years ago, and I'm in the industry, and I was even shocked that, okay, it's been 20 years, I'm now getting term again. Oh my goodness, yes, it's increased in cost, but we needed it, so we got it. So it's going to increase every year. It's sort of a curve where it's low when you're young. As you get older, it goes up like that.
And that same thing affects the annual renewable policies too.
Right. Except they do it annually. Yes.
Yeah, that's a place that's a path I've never gone down, and thank God for that. Okay, you know what? I'm going to tell you right now, this next question, I've been dying to ask it. To set the scene here, I'm in my car, driving through Southern California, sometimes going out to the desert. And obviously I have without giving too much promotion, my satellite radio on, and often on the hockey channel, surprise, surprise. But what annoys me about satellite radio is I'm paying all this money for it, but they still have commercials. Right. I thought when I got satellite radio, there'd be no more commercials. The road to hell is paved with good intentions. So I have my radio on. I'm listening to them talking about how my Toronto Maple Leafs are going to win the Stanley Cup. And all of a sudden, this ad comes on promoting term insurance. And this is amazing, Scott. Term insurance, you can buy it online. It's super cheap. There's no medicals. It's done in like this. You're insured. So the question is, can I simply purchase term insurance online? It's cheap, no medicals, it's all good. I cannot wait to hear your response to this.
Wayne, if it sounds too good to be true, it is. You can buy insurance online, but you're calling somebody at another end. You don't know if they're getting paid for the amount of calls that they answer. You don't know if they know anything about the industry at all. You don't know if they're looking out for your best interest. You don't know if the policy you're going to get, just like I just explained, you don't know if they're going to try to sell you an annual renewable term, if they're going to place you with a company that gives very poor underwriting, if they have convertibility on their policies. You don't know if they're going to take care of you. And when you find an individual such as myself, I'm going to look out for your best interest and make sure that we get you into a policy and a product that you're going to be happy with on day one through the entire process in the back end. And if you have questions after you purchase the policy, then I'm there for that also. I also will say that many of the advertisements, just like advertisements for virtually anything that we see, you think you're getting one thing and you get another. You think you're getting super, super cheap life insurance, and then oops, sorry, you don't qualify for that. Or, it's going to be super easy. You don't have to do exams. We have a lot of policies for young people. If you're young and healthy, even if you're middle-aged and healthy, oftentimes you don't have to take exams. But I'm not going to promise somebody that you don't have to take blood and urine at all, because it's up to the carrier. If they do a quick phone interview with you, they may clear it and say, hey, no need for an exam. So we give that also, but we're not gonna state across the board, hey, no exams ever. If you're unhealthy and you're not required to take an exam, then you're going to pay a heck of a lot more for your life insurance, because they're putting you in a really low rating. They're going to cover themselves.
Well, as I expected, you've made some excellent points about term insurance today. That said, not all life insurance is the same, and not all life insurance needs can be addressed by purchasing term life insurance. You got to be careful here. And again, we can do a really quick sort of overview. I know we've done a whole webcast on this, but not term insurance is not the placebo for everything. So I mean, that's why permanent insurance is there. So maybe just again the high level on features and benefits on permanent life insurance.
You want me to give the high level on permanent?
Yeah, just real quick, just give people.
Yeah,
because we did the whole webcast on that, but just to give us.
Yeah, so permanent, of course, with term, you're going to have the term that it's good for, and when that term is up, it's gone. So with permanent insurance, just like it says, that's insurance that you want to have for your life. No matter what, you're going to need it. You're going to need it when you die, for estate planning, for legacy that you want to leave, for different purposes where that life insurance, you're going to need it to the very, very end, because it's going to serve a purpose when you pass away. And so permanent insurance, although more expensive, there are many, many more uses for it than what we mentioned, but it's more expensive. However, if you need it, it's well worth having it. And in our other podcasts, we'll share, of course.
Yeah, we're gonna have a specific webcast designed specifically for the questions you should ask before you purchase permanent life insurance. English is my first language, by the way. In the meantime, we're going to also be talking about DI too. I should mention that. In the meantime, though, Scott, we really I'm sure people listening today or watching our webcast today are going to want to maybe reach out to you specifically and ask questions about insurance. What's the best way for them to contact you? Is there a preferred method?
Yeah, two ways, really. First of all, my direct line, 805-208-6587, or they can email me at scott@tntpremierinsurance.com.
Again, Scott, I want to thank you again for joining us. I've done a great job again talking about term insurance. I look forward to having you back again.
Thank you.
Scott Thurman is the principal and life insurance general agent with Thousand Oaks, California based TNT Premier Insurance Solution.
Thank you, Wayne.
I look forward to bringing you the 3 Questions webcast, and I hope you find them educational and informative. Please consider liking this video and subscribing to our YouTube channel. And to receive a notification of when our latest webcast has been posted, please click on the notifications bell. Lastly, to schedule an online Zoom consultation with me to discuss your wealth management needs, please click on the link in the description box below, www.onecapital.com/meet with Wayne. Thank you and see you soon.